All right, good morning, trade pros. Welcome to our morning market update for Thursday, February the 22nd. I'm just going to adjust the camera here a little bit. In today's morning market update, we're going to talk about a few things. We're going to talk about Bitcoin, oil prices, US dollar, and bond yields. We're going to go through that, and I'm going to set you up for the trading day and get you ready to get out there and make some money. Yesterday, we had some issues with our live stream. Today, we're back up and running. But yesterday, we still did a YouTube video. I encourage you guys to go on our videos page and check out the video we did on the Federal Reserve and breaking down the meeting minutes. That was a very important session, or some important release from the Federal Reserve on the meeting minutes. So I encourage you to watch that video so you're up to speed with it if you already don't know what the Fed said. All right, let's get started. So in Asia today, Japan's down 1.1%. Hong Kong's down 1.5%. China's up 2.2%, and India's down 0.1%. In China, markets were very volatile. Remember, China's back from their New Year celebration, and markets got super volatile. Their equivalent of the VIX got halted because it was just going too crazy. There was too much volatility. Equities crashed at one point and then recovered to finish back at a positive number. So there's some volatility coming back in. Gold prices have been weak in the absence of the Chinese market being closed. And when the Chinese market reopens, usually gold prices start to stabilize. That's a loose correlation. That's not something you throw your money on, just hearing that from a guy on YouTube. But keep an eye out on that. I think gold's going to find some support in the next little bit. All right, in Europe at midday, London's down 1%. Paris is down 0.5%. Frankfurt's down 0.8%. So a little bit of a bearish Asian equities market as well. So bearish Asian and then bearish session in Europe also. In the United States, rather, the futures here, Dow Jones is up 0.1 of a percentage point. S&P is leading a little bit, up 0.3%. NASDAQ up 0.1 as well, 0.1 of a percentage point. All right. The US dollar overnight is, since yesterday's open, the US dollar is up almost 0.5%. It hit the $90 mark on the dollar index like we had forecasted because it wiped out some short sellers. A lot of traders were short the US dollar and they got into the trade late. We trapped some traders down below the lows and we cycled right back up and wiped out the buy stops on some lower volume. So the dollar trend is still down. However, the dollar has stabilized and it's rallied. This morning, we also saw minutes from the ECB, the European Central Bank, led by Mario Draghi. And those minutes showed concern of currency wars shaping out. That and the UK Brexit situation didn't really go too well for Theresa May yesterday. She threatened to not make the payment, the exit or the divorce payment, as they call it. And that put some volatility into currency markets throughout the last 24 hours or so. So the euro's trading really weak this morning. It got hit on those ECB minutes. And as the euro or as the US dollar drops, rather, the euro dropped, the US dollar went up. That put some pressure on equities. But right now, the dollar looks weak once again. So this morning, the dollar is weakening, the US dollar is. And that's really your sentiment to look for some upside on equities. Today, we could have a rebound day if that dollar pushes lower on equities. So on S&P 500, we could be looking for a long trade setup here. Also on crude oil and on gold. So those assets may just rally if this US dollar stays weak. Bond yields have also kind of given up some of their upside rally. They're pausing at this play at the 2.9. What's the 10-year yield at? I have it right here. 1 second. 2.95. No, 2.93. So the 10-year yield climbed to as high as 2.95 yesterday. Now it's at 2.93. So yields are taking a little bit of a breather from the rally. And that's given us an opportunity for the equities to rally out a little bit, put some bullish momentum in there. So yields in the dollar are turning. Or at least they're slowing down on their ascent, and that's putting upside pressure on risk assets. So keep an eye out on those two things. They're very important today. Speaking of oil, let's get down to crude. Crude oil is down 0.4% today to 61.44. Yesterday, we had inventory numbers, and they came out as follows. So you guys will usually recall that oil inventory on the API statistic comes out Tuesday at 4:30. But because Monday is a holiday, it came out Wednesday. Everything's pushed forward a day. And that means today's DOE Energy or Department of Energy's inventory report for crude oil is today instead of yesterday. So there's going to be a good crude oil trade today. You got to watch crude. If you're day trading, you'll have a lot of momentum in it. Yesterday's inventory numbers came out at 1.5 million positive, so less of a build than previously seen in oil markets. That gave it a little bit of life, but the real bullish number that got oil a little bit excited was the gasoline drawdowns. Gasoline had Actually, gasoline had the 1.5 million. Can't even read my notes today. Gasoline had the 1.5 million, and crude had a drawdown of 0.9 million barrels. So that was a pretty bullish number. For today's report on inventory for oil, what you're looking for is to see a confirmation. If we get another surprise drawdown on crude, I think we got some upside. We're going to wipe out some buy stops from short sellers below. We're going to hit some resistance points up above and then probably curl back on crude and continue to the downside. Watch the inventory report. It's coming out at 11 a.m. Eastern, not 10:30. Usually it's 10:30 when it's a regular time slot. When it's delayed by one day because it's a holiday, it's 11 a.m. and then natural gas inventory goes at 10:30. So you have natural gas trade at 10:30, crude oil at 11. Those are two very important reports you should be following and tracking with today. It's very, very important. Gold price is down 0.6%. We're looking at 1,320 as a key support, and up top 1340 is a key resistance. So if you're short anywhere near the 1340s, you should get some more downside moves. But we won't break. I don't see us breaking the 1320 in one shot. If we do, there's a lot of sell stops below, but I think we cycle back up first. Gold's dropped a lot in the last couple of days. And with China coming back online, I think gold will pop a little bit here, and then that rally will be sold into. That's where I'm looking to short it. All right, Bitcoin is down 2% to about $10,000, 10,250 pre-market. Get this. This is the funniest thing ever. A hacker found his way in Japan into an exchange that there was a bug in it. So what he did was he found a loophole where he could buy an unlimited amount of Bitcoin for free. All right. And what he tried to do is buy as many as possible and send it to his wallet to get that payment. Now, if you found a loophole and you wanted to exploit it, how many Bitcoins would you buy? That's the question I ask you. Get this. This guy spent $20 trillion US worth of Bitcoin and he bought it for free and tried to wire it out to his wallet, but he got caught. Here's the stupidity in this. There's only 21 million Bitcoin. All he had to do is a little bit of math and say, look, at 20 trillion, it trading at about 11,000 yesterday. That's 1.8 billion Bitcoins. I mean, that's going to set off some alarms. 1.8 billion Bitcoins don't even exist. The cap for that's 21 million. This guy tried to make off with $22 trillion worth of Bitcoin and he got caught. The reason that scared Bitcoin is not the fact that this guy tried to make off with that much money. It's that he was able to find a way into the network to get in and buy them for free to begin with. So that spooked crypto markets a little bit. They're pushing down today. The last 2 days, be careful because I'm still seeing volume increase on the downside. So I've been waiting for a dip for a potential long entry. But if you see volume increase as these prices are dropping, that's not the time to stick your neck out. It might look cheap now compared to the 20,000, but what if it gets down to 3,000? All right, so cheap is a relative term to a previous high, which is a made-up human concept. Another way I challenge you to look at it is instead of saying it was 20,000 just a couple months ago, so I'm going to buy it cheap today, say maybe it's only worth what it's valued at today. All right, and try to think future long-term of what it might be worth and find low-risk entry points. I don't think we have the low-risk entry point yet. This dip would have been viable if we didn't have the heavy volume that came with it on the downside. So be cautious on Bitcoin. Supports at 9,000. I think that's what we'll start to see the sell side wane off and kind of quiet down, and then the buyers will show up. So I'm looking around 9,000 to 8,850. All right. This morning we have 9:45. We have Consumer Comfort Index. That's coming out. 10 a.m. we have our leading indicators dropping on the economic front. 10:30 we have EIA's natural gas inventory. 11 we have petroleum inventories or crude oil inventories from the Department of Energy. 11 we also have Kansas City Fed manufacturing survey. 1 p.m. we have results of a 29 billion 7-year note auction. That's very important for fixed income markets and yields overall. So watch that at 1 p.m. And at 4:30 you have money supply along with the Fed balance sheet. So we have a very busy economic calendar day. Expect for these numbers to be priced in and get some volatility going. The last few days have been quiet on an economic front. Not today. Some big news is coming out. So keep your eyes and ears to the wire and trade what you see. All right, let's end it off with this one update. Amazon shares yesterday hit a new all-time high on Wednesday. They surpassed $1,500 for the first time. That's massive. The reason some of this momentum's coming into Amazon is the weakness in Walmart. One of the Walmart earnings that scared investors is the fact that Walmart, their online sales are doing worse. They're doing poorly. And what is that due to? It's due to the Amazon effect. Yesterday, I went out and bought a mouse at around 9:30 in the morning. Get this. by 6 p.m. it was at home. I came home, the fiance had picked it up. It's a crazy looking mouse. It's like a vertical standing mouse, but it's ergonomic. So the point I'm making is Amazon is just destroying retailers, and I still see upside for the stock. The only risk is, will equity markets overall comply? Because if S&P 500 and everything starts dropping, Amazon's not going to be able to hold on by itself. But yeah, it surpassed 1,500 to a new all-time high, and it makes it the third largest public company. That's huge, Donald Trump would say. All right, guys, you know what you're expecting today. You know what you're looking for. Watch for these economic events. Watch for crude oil at 11, natural gas at 10:30, and consumer sentiment here from Bloomberg at 9:45 in the morning, 15 minutes right after the U.S. session. Cash open. So you guys have a great day. Manage your risk. Trade like a trade pro. Like, comment, share, subscribe. We got a lot of awesome content coming your way. I'll see you guys tomorrow for our last morning market update of the week. And I'm really excited about it. So you guys take care. Good luck. Good trading. I'll see you tomorrow. And don't do anything I wouldn't. Don't get in too much trouble, but not too little. All right. Find that fine balance and ride it out. You guys, I'll see you tomorrow. Thanks for tuning in. Ciao. Let me grab my funky mouse here. All right, trade pros, let's get in here and open up some levels. What did I do? I messed around with the mouse and it stopped working. There we go. All right.